Hey guys, Freaky Finance here. Today we're going to talk about Pinterest. So this one kind of saved me this week. Actually, before I jumped on the video, I kind of like to go through and I show like if I own it or not. And I own Pinterest actually. It's my biggest position. So Pinterest is probably one of the most exciting ones that we talk about on the channel. I think longer term for a lot of reasons that we're going to jump into. So anyway, it's my number one position now after the move on Thursday or Friday morning. And I'm pretty confident in the business. Today was the first, or this quarter was the first kind of like proof point, I'd say, for what I'm looking for. It's been growing. It's been kind of like a grind. It has been improving ARPU, but it's been kind of like gradual, very slow. And then all of a sudden we saw an acceleration in rest of world. And we're going to go through that real quick. I know a lot of viewers, I can see how long people watch the channel. I can see like most people last like 3 minutes and then start fizzling out. So I'm going to try to show like the crux of what I'm excited for about Pinterest right away. So Pinterest, if you had to understand the idea of why we like Pinterest, it's the ARPU spread. So what this is from before the quarter, so it's a little bit outdated now, but it helps view it. And you can see Pinterest US ARPU 7.3. It's actually higher than that. It's around 9 now. So again, these are outdated. ChatGPT. This is from ChatGPT. Rest of the world's only 14 cents. That's a delta of 42. Now the rest of the world's around 20, but again, still a big delta is what I'm trying to articulate. Snapchat, similar trend. The numbers are going to be different because this is old data, but you can see the delta between rest of the world and North America in terms of users only 8 times. So basically, Pinterest makes 52 times more per user in North America versus rest of the world. Snapchat, however, only makes 8 times more. Facebook makes 12 times more, right? And so it kind of helps you. Roblox makes 4 to 6 times more, right? And Etsy makes 3 to 4 times more. And Shopify is 2 to 3, which we own as well on the channel. So very big blowout. You can see a lot of them are in this 3 to 12 range, depending on if they're ad supported or not, right? There are different business models here. But for ARPU, the very similar one here that I've seen this trend before when we invested in Facebook, long before this channel started, we invested in Facebook, and the trend was the same. Now the gap wasn't that huge between rest of the world and North America, and the gap's always going to be there. But with Pinterest, all we need to know, and this is the crux of the investment thesis, is that that gap's going to slowly close. And if it continues to close, like this quarter it showed that it did, that's great. So when ARPU rest of the world grows 24% year over year, and North America only grows, say, 12%, that's a win for the thesis. That's why we own it. So even though the stock has gone up, I know technically it's 20% worse idea. The results were way better than that in terms of my relief, because this shows that it's working. So this is one I'm just going to ride out. Hopefully I get some more entries. I mean, last quarter the thing shot down 20%. So these things, Pinterest is moving up and down, and it's great for me because it allowed for even more entry last quarter. So anyway, we're going to jump into the crux of it, but I just wanted to point out this, and we're going to go back to this really quick because it's critical to understanding why we're long Pinterest and just how criminally under-monetized the rest of the world is for Pinterest, for its users, which is the bulk of its users. Which the other thing, top applications, Pinterest is actually in the top 10 if I lump in all the meta platform stuff. Now this is outdated again. Now it's 550 million. But it helps show this where it is on the stage, especially relative to its market cap, right? So it's in with the big boys, but it's only at a $27 billion valuation, right? And if we take out the $2 billion in net cash, $25 billion valuation. So relative to what its currently footprint is in terms of MAUs, it's relatively cheap. And it's also criminally under-monetized, I think, in the rest of the world. So just pointing that out here. If we had like a little 5-minute spiel on Pinterest and why we're excited about it longer term, this is it. All right, so let's jump into the actual program. Pinterest, we've already done a video on a lot of the backstory, so you can watch that video if you want. But basically, Pinterest, this is from the recent 10K, so on page 9, they kind of list their ad formats. So that's how they make their money, is advertising. And they have a whole lot of different ad types. They're improving the ad function. AI is actually accelerating this change. It's one of the other things that we like about it. It's not a crux. I mean, if they're winning in AI, I should see the ARPU go up. So I'm going to look at the ARPU first, and they can tell me if AI is working or not. And I'll believe them if the ARPU is going up for the rest of the world. Monthly active users, we talked about it really quickly. Just a slow grind up year over year. You can see rest of world, which is the critical one, 307 million users in the world. And these are the users that are only making, Pinterest is only making 20 cents off them per month, right? Now, so 14 cents a year ago, so they're improving, but it's still criminally underpriced, especially with against the $9 that they're currently making in North America. And I think we did a comparison before with Meta and how the trend over time, like the ARPU will go up over time, but the gap between North America and rest of the world should close for Pinterest, I think. And this, if I had to, we're going to jump to the numbers, I kind of pulled them, but if you had to like look at one thing that really stood out for me for this quarter, it was ARPU rest of world up 24%. So going from 15 cents per user to 19 cents per user. Sounds very small, but when you have 300 million users, that's huge. And not only that, it's an acceleration, and it's acceleration against what they're doing in Europe and US and Canada, right? So going from 8 to 9 sounds great, make an extra whole dollar per user, right, per month, but it's only a 12% increase. So this, because this growth rate is bigger than this growth rate, the ARPU gap is going to keep closing, and that's what I want to make me happy. And so anyway, Pinterest is finally putting up some pretty strong numbers, and the stock's still at $40. Anyway, I was just, when I saw this, I thought it was too good to be true. I was trying to dig for things that I didn't like. But anyway, you can see the ARPU over time. It is very seasonal, so Q1's always very weak, and then it just gets better every quarter. So weak Q1, good Q2, good Q3, and then usually Q4 kind of blows it out. A lot of Christmas advertising, seasonal advertising for sure. And we finally, I know it barely shows up on this thing, but this is the one I was most excited about, the purple going from 15 cents to 19 cents. So that's kind of the crux. They slowly expand the user, and they get more money per user. And the whole time engagement is still up. It's actually improved with the ad load improving. So that's also special. It's something unique to Pinterest, that the actual engagement is improving as the ad load increases. It's not just a bunch of ads. They're actually giving people what they want to see based on what the people themselves are pinning to their sheets or their wall. So I just thought that was worth bringing up. We're going to go through the numbers really quick, but this also just helps show scale over time. Now, Pinterest, unlike Airbnb, isn't at that scaling part yet. Airbnb is probably a year ahead or two. And we will probably see Airbnb after this last quarter. I think they report on Thursday this week. This will be the last, in my view, crap quarter where the scale is hidden with a share-based comp from RSUs from their IPO, and we should see scale start showing up. Pinterest, I think, is still it should scale slowly over time, just the nature of the beast, but it's not at that stage yet. They're still investing a lot. They're still growing their headcount a lot in R&D, and you're going to see that. But finally, this quarter, we finally saw some payoff in the from the R&D investments, because we're actually seeing more monetization per user. So all this investment's finally showing up in the numbers, which I couldn't have said last quarter. It was there, like we could see more profitability, but we're also seeing more costs. So this was the first quarter in a while where we're like, oh, there's something here that actually did something right. They actually brought in some people that are doing something, right? Because Pinterest, the biggest con, we're going to go through the numbers in a second, is the share-based comp is very high. So basically employees, ever since the IPO, have basically gotten paid first, and the investors have gotten paid second. And I think eventually that's going to change, and this quarter was exciting for that. So anyway, let's jump to the numbers before we go through this. But all right, so annual looks kind of like a little bit of a mess here, but this is what I like to see. So the IPO, I think the middle of 2019 or April 2019. But anyway, they have COVID here, so actually went down in terms of adjusted EBITDA, and then it kind of shot up in 21 when the world was shut down. And it was probably a too good to be true part. You can see it, like if you look at a share price, you see like 2020 and early 21, very strong for Pinterest, and then it just collapsed ever since, and it's been kind of flat and slowly grinding up over time, even though the business has accelerated dramatically, especially in 2024. So anyway, you can kind of just see the trend here, going from $1.7 billion at $65 a share in revenue to now $3.6 billion in revenue at $40 a share. So it has slowly crept up over time, over the last 2 years, but not in line with what the fundamentals are showing, especially in the latest quarter. Pinterest, in terms of COGS, here's gross margin. You can see 73%, 75%, 77%, back up to 79% in 2024. So We're almost at 80% margins. I think they're going to get there. This is one of the lines that actually scales very well for them. The line that doesn't scale for them is product and development. We're not seeing that scale yet. You're still seeing product and development. So R&D is still around 35% of sales. So that's where they're increasing their headcount every year, right? They have 19% higher. They said because of more payroll and headcount on this quarter or this annual year. They did do a little bit of restructuring last year, which pulled some cost out of the business, about 4% headcount. But we are seeing the creep up over time. And a lot of this is share-based comp. So again, the employees at Pinterest, how they're attracting and retaining them is through share-based comp, which as an investor, it eats away from you in terms of dilution, right? So it's something to be aware of, but I've seen it before with Uber, right? I was just reading something because Ackman is an Uber now. So we buy Uber and Ackman's an Uber now. And what's the other one? There's a couple other ones where it's like, oh yeah, now he's in it. Oh yeah, a BN, Brookfield. All of a sudden he's in it. I was like, okay, well, I was in it 100% ago. But anyway, it's just funny to see this. And we have seen this before. This is not unique to Pinterest. We've seen share-based comp very excessive at Uber, and then it kind of got past it, grow past it. Airbnb is right at that inflection point, in my opinion. This next quarter, it's the last crap quarter, and then we should see the share-based comp in terms of a growth rate actually decel versus the revenue growth. So, and that's just a function partially from IPOs and the pressure that they put on the RSUs and the valuations that they IPO at. But it's finally grinding out that vesting period. So I think we're going to see that at Pinterest. It's just farther away than Airbnb will be, because Airbnb will be a 2025 event in terms of scale per expense item. Sales and marketing, it is there. It's just not as clear. It kind of like they'll hire, then they'll stop hiring, then they'll hire again. Then revenue growth accelerates, and then they chase it almost, which is interesting for sales and marketing. You think it would invest in sales and marketing, then the revenue accelerates, but it doesn't show up that way in the metric. So we are still seeing a decent amount of hiring, 8% headcount in 24 versus 23 on that line. But again, because revenue accelerated so much, especially in Q4, it outscaled that as well year over year. And then G&A should be the source of scale over time. There's no reason G&A should be 12% of Pinterest sales. I expect that to go steadily down over time, over the long run, like we saw with Airbnb and Uber, Spotify. Anyway, here's the share-based comp. So I like to look at this just to see like the trend and just how much money the employees are making, right? 21% of revenue is going to share-based comp, which is still extremely high. So that's one of the reasons I think the valuation is still very low, is because so much money is going back into the employees and not the investors, right? Now I think it's going to be close to being on the cusp, but it's still very high. But they're finally putting up numbers in terms of ARPU growth. So now I'm happy. Last quarter, I was like, why are you spending more money? We're not seeing it in ARPU, right? And we were seeing it, just very slow, whereas it finally accelerated this quarter. What else should we say? I mean, the balance sheet's fine, so they have net interest income. We'll see that in a second. Income tax is the big line this year in terms of noise. We'll talk about this. I actually went to the note 10, just to see what it was. And we've actually saw this before with other tech companies as well that had accumulated losses over time. And we'll talk about what that is in a second. The valuation still, 27 billion, 28 billion now after the move today or on Friday. But you take out the 2.5 billion in cash, so you're at what, $25.5 billion. So for a company with 550 million users, with a crazy delta between ARPU in North America and ARPU rest of the world, it's just exciting to me. The balance sheet though, is pristine. It is a tech company. It basically financed their venture into the IPO. The cash on the balance sheet is largely from the IPO. You can see that here. And it is free cash flow positive. It's not like it's going away. It is growing, it is profitable, and it does have free cash flow. Now, free cash flow is actually ahead of earnings. That's generally what happens. Free cash flow goes positive, then earnings go positive. Again, we saw this with Uber. Here, you can see, what do I flag here? Oh, yeah. Still an accumulated deficit in the equity side. It's almost chewed through it now, especially with this big gain from the income tax asset, the deferred asset that we'll talk about in a second. But overall, you can see the free cash flow just chug along 50% year over year. And the CapEx is just like Airbnb, just so little CapEx. So basically all the free cash flow goes to the shareholders Or technically it's slowly been building up the cash balance. They started buying back shares. You couldn't tell from here though. And that's because the two things are fighting each other. So share-based comp is dilutive and the buybacks are anti-dilutive. So we're going to see this, I hope, flatline in 25. We'll see. Right? I mean, based on the performance that they're putting up, it's going to be close. And if they ever wanted to really juice it, they could by using some of this cash that they have on their balance sheet to buy back shares to offset some of this dilution. But I think we're going to start seeing this, at least in terms of rate of change, start peaking out. We might actually see declines in share-based or in fully diluted share count next year, depending on how much they decide to buy back, because the free cash flow is there now. So it's just an exciting. You can see this here in the Class A share buyback. So a lot of the free cash flow is coming to shareholders. It just, you don't really see it because of the equity, right? If you were to compare the 600 billion Class A share buyback versus the 765 billion that they paid in share-based comp for the same year, right? You can see that's why we're not seeing that. Now we might start seeing it quarter over quarter, but we haven't seen it yet on a year over year on a historical basis. Anyway, what else is there? We talked about the ARPU growth already. It's the main driver of why we're excited. EBITDA is accelerated year over year as well with the free cash flow jump, which is nice to see. It did $1 billion a year and EBITDA, which is exciting, right? So $1 billion, I mean, it's over 25, so it's still 25 times EBITDA, but I've seen this before. So, and I'm finally, this quarter was very good for me. So when they're gonna have a crap quarter, which eventually they will, I'm gonna have to go back to this video and be like, this is what you saw. Are you still seeing this now? So that's something I'm gonna look at, because this quarter in my mind was like, wow. And yeah, it just criminally under monetized in the rest of the world. So you can see my big check mark there at 19 cents. So it's just like, yes, thank God. All right. I don't think we need to talk about Q3. What else did we talk about? We kind of talked about the ARPU deltas. That is the crux. Like if they can get this spread, right? And this was in 23. So these numbers are kind of all over the place, but they help show the range and how different they are, right? Because Facebook's very ad dominated. And you can see the ARPU, 5.5 Asia Pacific, 68, right? So big spread, but it's only like a 10, 12 times difference, right? Right here, 12 times. But Pinterest here, in this example, is 52 times. That's a crazy delta, and they should be actually similar, right? If Pinterest can make $9 per user in North America, they have to make more than 19 cents per user in the rest of the world. They have to figure out a way. And this is the first quarter where they're finally saying, yeah, we figured out a way. So just exciting there. What else could I say? This was the original idea. This is a Rich Greenfield. He's this was older. I think it was like when he put it on his good idea when the stock was actually pretty expensive. But now we saw the rate of change slow down. We saw the market hate it, and we got some good prices. So, and that generally happens with great companies, right? You just have a G, like a growth slowdown. You get the price that you want. You just got to wait. Now you need to know the business is great. And you won't know that unless you're already looking at it, probably. It's hard to scramble in the moment. But anyway, here you can, it just kind of shows the delta, right? Difference between US and international. These are different. So things about sometimes in historical is that users get grouped in different ways. So Pinterest used to do US international. Now it's US, Europe, and rest of the world. It kind of just shows the difference here. Because if someone astute would be like, why is it 35 cents per user international when it's only 19 now? And that's because they split out Europe. So they went US, Europe, and the rest of the world now. But anyway, you can still see the spread is huge, right? So Facebook spread, like in the 9 category, and Pinterest spread, it's like over 20, right? And it's technically worse in terms of rest of the world. So it's just worth bringing it out. That was kind of like the original thought. And then I was like, Jesus, is there something here? So I thought that was worth a shout out. What else would we say? Oh yeah, this is note 10. So on page 86 of the 10K, this is their deferred valuation allowance. So like kind of like what they did and why they did it and where it's coming from. So a lot of it's from research tax credits and operating loss carryforwards, as well as some research capitalization amortization. Basically, here they say, based on analysis about positive and negative evidence, we concluded that it's more likely than not that our U.S., federal, and state, you can see that was a large part of it, Excluding California, deferred tax assets will be realizable due to our demonstrated sustained profitability and continued forecasted income. Basically, they're saying we're now a profitable entity, so now it's more likely than not that we can harvest our losses that we've taken and apply it against the future gains we're going to have. So that's what this was. It was accrual for that. So I just thought that was worth bringing up because it's kind of unique on the channel. We don't get to go too much into accounting noise all the time. It is a big source of accounting noise. Like if you were to just if a machine was just looking at the PE multiple, it all of a sudden looked like Pinterest is cheap because it has this big gap number, a big gain for basically releasing this allowance. I did think it was interesting that they're keeping some of the allowance back because some of them they're not as sure about, specifically California they shout out, which I thought was interesting. They did not realize the Irish deferred tax assets, but it's kind of interesting color. But that's the main reason why. Like if you look at the earnings, like net income year over year, just from accounting basis, and again, a lot of people love GAAP numbers, standardized, etc. But they can skew things in certain times, and this is one time where it actually skews it. If you were just to use GAAP, right, you need to actually adjust it. Because Pinterest isn't actually that cheap at 12 times earnings if you were to try to just take it from a machine right now based on the latest gain that they just put up, right? So you need to be aware of that. It is a huge number, right? It shows up like a sore thumb on the annual, right? On this line, all of a sudden 1.5 billion, right? For a company that only brought 3.6. But that's basically all losses. And they did have a lot of accumulated losses, right? So basically we're now profitable, so we can start harvesting that and applying it to our future gains, or our future profitable income rather. What else is there? We kind of talked about that already. We'll just talk about really quickly. I'm trying to go quick for the call because I know these the average person does not make it to my 30-minute videos to the very end. This was just kind of interesting on an AI thing. They're talking about the Super Bowl because that's tomorrow. The day of this filming is February 8th, 2025. We recommend ideas based on activity of all the users in Pinterest to have a similar taste and fashion and are interacting with game day apparel. So as we know, this user is likely hosting or attending. We're able to help them. And again, this is just the whole principle of why engagement's actually improving with AI at Pinterest. It's one of the things that we liked about the company in terms of a rate of change, and I think it's starting to show up, right? So now we're going to talk about one of the reasons why we're seeing monetization improve, right? Like we did see third party. We saw Performance Plus start showing up. There's a lot of things that Pinterest is actually doing to make the ARPU go up, not just me hoping. So this is one where just, yes, the users literally tell you what they want, and then you just basically have to give it to them. And that should only become easier with AI, like personalization and matching, like quarterback matching, should only become easier with AI. And I think we're finally starting to see it here. This one, engagements. I thought this was just interesting in terms of like how they view engagement on the platform. 1/3 of their engagements on the home feed, which I thought was interesting. And then lower funnel search and related pins. So that's like right when you're about to convert to a sale, lower funnel, is roughly 2/3 of engagement. And because of this, relative ads can improve the user experience. So that's kind of exciting. They can literally see what you want to buy and then just basically try to give an ad for that. And that's special. And I think it's not understood by the market. What else can we say here? Well, we're seeing margin expansion. That was kind of implied in when we went through the annuals real quick. 5.1% year-over-year margin expansion. They do kind of say that margin expansion is going to be higher in 2025, but it's going to be lower in terms of growth rate. So they're not going to have this big outsized 5% more money on every sale you make in profit year over year like they just did in 24. So that'll be interesting to see how the market treats that. I mean, it barely, in my eyes, it barely treats Pinterest as an AI winner, let alone that it's ever going to close the ARPU gap in terms of the rest of the world. Like that's definitely not priced in. It's whatever the status quo is priced in, I think, in Pinterest. What else is there? Again, this is really cool. So this is Rich's question, Rich Greenfield. His question about engagement is always about engagement. And I did think this was interesting, right? Because the weekly actives divided by the monthly actives are improving. And that's really good, especially when you're increasing ad load. You want people to use it more, and that's happening. So they're not seeing like a pushback from too many ads, or the ads are actually content, because as long as it's working, it should be giving the user what they want to see, right? Or like, this is the things that they're looking at right now. Maybe they want to buy this, right? That's kind of what you're doing. almost like an assisted shopper on steroids. But anyway, so that's just worth bringing out. That is critical. Like the product needs to work, so obviously you don't just want to dump a bunch of ads. I remember that was one of the things when Zuckerberg was doing mobile push for ad load. And that was like the big thing, like, oh, you're not going to monetize it right. And then other people were like, oh, they're going to monetize it too much. And then it was like, it was perfect, right? But it was just a whole bunch of opinions from people that never ran a business in their life on TV. Anyway, this share-based comp, share repurchases, so they did start stepping it up a bit. These actions have driven a 1.7% decline year over year in fully diluted share count. Didn't show up in the numbers because the share-based comp is so high, but in terms of a quarter over quarter, it probably is starting to show up. So that is worth bringing up. It'll be interesting to see if this happens. This is their statement, not mine. Verticals. I always like the verticals for the ad market because it kind of helps to show me what's strong, what's working, who's paying right now, who's suffering, right? And it kind of usually these things are like in line with what we're currently already seeing in the market. So we've seen a lot of consumer staples get cheaper, right? We've seen Pepsi get pretty cheap. We've seen Monster finally go down year over year. We've seen Celsius get destroyed, right? Which I own. We've seen a lot of consumer packaged goods just get destroyed, like Dollar General's not doing great still, right? Even though they're consumer staples. Nike is a good example, right? We've seen a lot of these consumer goods get really hurt, and we're seeing that in ads still. So they're still saying, they said this all year for Pinterest in 24, that food and beverage, CPG has just been very weak in advertising, which will be interesting because I'm sure they're going to be one of the biggest Super Bowl ad sponsors. But that's part of that is because of the consumerism around the Super Bowl. But anyway, I always look at this, right? So technology and financial services continue to be a source of strength, which is kind of interesting, right? Financial services on Pinterest. I kind of wonder what they're advertising, right? Like, should I start advertising the channel on Pinterest? It would be kind of interesting to go through it and see. But anyway, Performance Plus is another reason that we're seeing the ARPU growth. Lower CPCs and CPAs, and automating more of the camp, basically making it easier for advertisers to advertise on the platform. So it lowers the cost and it makes it easier to do it, so more people are likely to do it. And that's what's happening. Blah, blah, blah. I talk about their strong sale. I did think this was interesting because I'm trying to make sure it's sustainable growth. I don't want because there's already seasonality enough in the business model, right? Like next quarter is going to look bad versus Q4 because that's just how Pinterest is. And then it just gets better every quarter, and then Q4 gets good again. So, and we'll have to see. I kind of want to run this against the price chart and see if there's ever an opportunity based on the market and understanding seasonality. But I haven't seen it that clearly yet. But anyway, here, just Performance Plus beginning a multi-year product cycle, and it should basically be a slow grind up over time. So I just thought that was good. And you have a return on ad spend bidding, which optimizes bids to maximize return on ad spend. Will be live to all eligible investors at the end of Q1. They already saw their large retailer, sizable product catalog leaned into this product. It's worth mentioning Walmart's a big part of Pinterest's advertising business. So Walmart's in it. That's one of the reasons why they're resonating with the younger audience for a retailer that's generally probably skews older, I would imagine. They're seen as a cool place, probably because they're so cheap, right? Walmart's pretty good, at least where I am. A third party, we haven't talked about too much on the channel, but that was another reason why we are seeing the acceleration, I think, in rest of the world, specifically with Google. I do think that is helping monetize parts of the business that aren't being monetized right now. Basically, they're filling it in with these third-party ads from Google or Amazon. So I just thought that was worth bringing out too. That's another reason why we're seeing the ARPU growth. Again, it's not just me hoping. Though they did I thought on the call, they kind of pushed back on third party a bit. They kind of said, oh, we're doing our own thing too, right? And so I did think that was interesting. They're trying to thread the needle there. But it's kind of my thoughts on Pinterest. Longer term, I'm pretty excited about the business. I really don't care what people push it to. Like last quarter, we got some at 28, I think, in October. And then it sat there for a while and then finally shot it up into the call. But it's, in my eyes, this thing, if you look, right, we're almost at the same price we were when they IPO'd. And when they IPO'd, they only had 450 million users. They're only making 305 million in EBITDA. Now they're making $1 billion. Their margins have improved. Their scale is showing up in G&A anyway. Right? So overall, I just think the market's still kind of sleeping on what this potential could be. Now it's not there yet. It's not all set in stone. But this quarter was finally a reward for the investment they've put so far into this line, right? Because I'm like, why am I seeing no scale here, right? And finally, we're seeing the return on some of this investment on employees. So some of the employees are starting to make an impact in terms of the product of Pinterest and the ad market around it. So, and it's showing up in the numbers, right? Which does take time. So, um, it's just exciting. It's an exciting company to follow. I really hope they close the gap there between rest of the world and North America in terms of the ARPU spread. It should be half what it is, at least, right? Which would be huge for the economics of the business in terms of both profitability and EBITDA. But anyway, I'd like to know your thoughts on Pinterest, and have a great rest of your weekend.